Derick Tan is my guest. He's founder of Timing and You, and he's developed a proprietary three-dimensional timing and you relative risk index, probably the first of its kind in the world. He combines cycle analysis, technical analysis, and fundamental analysis parameters to give us a risk assessment of stocks, companies, different stock markets around the world. Derick, welcome to the show.
Good morning, Michelle. It's great to be up on Money FM again to share, especially how we are looking at the global stock market, especially the US stock market, which doesn't seem to be acting too well. So that's probably the tone for this morning's session. Yeah.
Indeed. All right. We're going to start with Airbnb. Is it a buy? What do the fundamentals of Airbnb stock chart action say to you, Derick?
All right. So we are looking actually the chart of Airbnb. All right. So it IPO in December last year, 2020. So this is about a 1 year plus chart. All right. So let's go in depth, zooming into the price action of Airbnb. All right. As you can see, there's a rate downtrending resistance line. All right. So actually, Airbnb at this point of time, has formed a lower high. All right, lower high. So now there's a very critical support at this blue circle over here, which is about 160.49. 160.49. If Airbnb were to take out this 160.49, that means
Mm-hmm.
we'll confirm to see a lower high and a lower low. That means this is a start of probably more weakness for Airbnb going forward. So if that were to happen, if this support of 160.49 were to be taken out, we may see Airbnb head lower to this green circle over here, which is about 130.31. All right, 130.31. Also, please watch out for this critical support, which is 160.49. All right, but on the other hand, if let's say the general market were to strengthen, and if Airbnb were to clear this red circle resistance over here, which is about 219.94, that means it may have more upside to go going from there. Also now, I would say do watch out for this blue circle critical support. This is where we'll see Airbnb will tell us where it wants to go. All right, so this is for
Mm-hmm.
Airbnb.
Yeah, I wanted to discuss this because nearly 1 year after its IPO, there's still a lot of chatter about Airbnb. I've been hearing a lot of investors, at coffee meetups or happy hours, and they're talking about Airbnb because when COVID-19 hit, travel hospitality stocks like Airbnb were among the hardest hit, and there were
Yes.
concerns that recovery would be slow and painful. But we've seen quite a comeback for Airbnb in 2021, 30%
Correct.
drop in revenue in 2020, but the past few quarters we've seen Airbnb really rebound. It's still a challenging travel environment. I mean, I was trying to make plans to travel. I was telling you, Derick, but
Yeah.
the fear of when a border it might
Mm,
slam shut, and then what I was going to have to do in terms of accommodation and work just takes the fun out of traveling for me at least. But for
correct.
Airbnb in its most recent quarter, revenue soaring by almost 67% year over year to about $2.24 billion. Airbnb stock price closed down 5.2% to around 171 US dollars. So there you have it, the stock chart of Airbnb. And in case you're listening and thinking, I don't see a stock chart, Michelle, you will, because we'll put up this video with Derick Tan and his proprietary stock charts for you on our YouTube channel very shortly. All right, from Airbnb, let's move to Ford and what the
Yes.
stock action of Ford charts say. Now, EV stocks have really multiplied in the wake of what Tesla has done, and electric cars look set to go mainstream. But we know that not all electric cars are created equal, and some are more ready than others for an EV future. So when you look at the stock chart of Ford, which has been named Wheels Automaker of the Year for 2022,
Right.
shares underwater by 4.8%, $20.43 US cents. But according to Forbes, Ford is doing the best amongst its peer of legacy automakers in in this pivot to EVs? What do you think?
All right. So this is a 10-year view of the chart of Ford Motor. The symbol is actually F. All right. So we can see that there was a big drop in year 2020, like a lot of stocks out there because of the COVID-19 pandemic. All right. So it's after which it staged from around $4, it staged a very, very strong rebound, almost a
Mm,
5 times rebound till last night where it closed at 2043. All right, so let's zoom in into the chart of Ford. So this 6 month view of Ford. So what happened was this last Friday, it actually broke out of this very tight rectangle chart pattern over here. Actually has a very good breakout with increase in volume. Then last night, uh, I mean, following the so-called the general bearish mood of the whole U.S. stock market, all right, it has a pullback. It has a pullback. Also, ladies and gentlemen, so now we need to see going forward whether Ford can so-called find support at this uh, rate resistance turn support. If we can, and we can go higher, break this white candle over here, we may see a Ford going higher from here. So if that were to happen, so we
mhm,
may possibly see Ford has a price objective of about 21.89. How do I arrive to this 21.89? I take this so-called this rectangle chart pattern. I take the resistance, which is this red line over here, which is 20.41. I minus this blue horizontal support line, which is 18.93. I take the depth, I add on to the 20.41. That's how I arrive at 21.89 possible price objective. All right. So now, but all this scenario only play out if Ford were to continue to strengthen. All right, so it may go up to 21.89. If
mhm,
it's this bullish momentum were to continue, we may just see Ford go a bit higher towards 24.47 based on the objective that I derived from this over here. We can see that there's actually a something like a chart pattern called what we call the cut with handle. All right, so
mhm.
I take the resistance over here, which is 16.37. I minus the support over here, which is about 12.32. I take the depth of this cup with handle. I multiply the depth by twice. Then I add on to the resistance of 13.37. This is how I arrive at 24.47. Also, in conclusion,
24.47 is your target.
yes. So
High estimate.
yes. So in
Okay.
conclusion is, if Ford were to find support at this 20.41, it can go
Mm,
higher. We may
mhm.
have a chance to see Ford going higher towards 21.89 or even a bit higher to 24.47 if
Wow.
the bullish momentum can continue. But on the other hand, if Ford were to come down, it were to
Mhm,
decline and break below this blue horizontal support here, which is about 18.593, which is where the blue circle is, or if it were to break that support 18.93, we may see Ford go lower towards its
mhm.
this blue color line over here, which is the 50-day moving average. This is where the green color circle is. All right. If the bearishness were to continue, we may even see Ford go even lower to this purple circle support here, which is about 16.37. All right. So this is my analysis for Ford.
So do you concur? I was reading CNN Money and about 22 analysts say it's buy for Ford Motor right now because it's held steady since December. This steady buy rating.
Yes, it seems to me, at least technically, Ford shows a bullish momentum. So, like what I say, if we can take out is last Friday, this white candle over here, we
Mm.
probably may see go higher. I'm more towards on the positive note than the negative note. But one thing is very important: the general
Mm-hmm.
market impacts 70% to 80% of the US stock. So we really need to look at where the general US stock indexes is going. That will decide the fate
Yes.
of a lot of stocks out there in the US stock market. Yes.
Which we are going to do in a short while with Derick Tan, founder of Timing and You. If you've just joined us, this is Money and Me. So interesting, we've been looking at Ford, and some 19 analysts have offered a 12-month for price forecast for Ford Motor, and they too have a median target around Derick's. 20 is theirs, a high estimate of 24, which is again very close to yours, Derick, and a low estimate of 12. When we come back, we're going to take a look at another EV play, Tesla, this time around. Elon Musk, has trimmed his Tesla stake further as he exercises additional options. So what's going on? We'll take a look at Tesla's stock chart after these messages.
LSEG, London Stock Exchange Group, a global markets infrastructure and data partner that is dedicated to Asia every day, where open isn't just a platform but a philosophy, giving you the access to the markets, data and analytics, liquidity and risk management you need, coupled with a flexible partnership approach to help open up more opportunities for you, your customers and society. LSEG, open makes more possible.
Money and Me on Your Money, only on Money FM 89.3.
Welcome back to Money and Me. My guest today, Derick Tan. He's founder of Timing and You, and he joins me this morning with more of his proprietary charts. We are very privileged to have Derick join us. He has a proprietary three-dimensional TNY relative risk index, perhaps the first of its kind in the world. He combines, he's a market historian, he tells me, and we're going to be talking about what he is preparing for when it comes to next year. They always say in order to look ahead, you need to understand market history. So he's kind enough to share with me what he thinks is coming our way in 2022, at least how he's preparing for it as an investor. Remember to always invest to the level of your understanding. That's what we hope to add to right here on Money and Me. We're talking now about Tesla. I wanted to look at Tesla's stock chart because Elon Musk, who is the world's richest person, has offloaded some 934,000 shares for over $906 million to cover taxes on the exercise of some 2 million options. This according to the regulatory filings that were updated earlier this week, Monday, in fact. So Musk has already sold more than 12 million shares since he pledged to do so on Twitter. What do you see when you look at Tesla's stock chart, Derick?
Well, Michelle, he probably did it for some good reasons. All right. So anyway, this is a 10-year view of a Tesla chart. All right. We can see that Tesla actually went through a quite, for example, 2014 to almost 2020, it went through a consolidation phase. And ironically, is during the pandemic that just see how strongly it rallied probably until recently. All right. So
Yeah.
let's zoom in into the 6-month view of Tesla. Ladies and gentlemen, I think we are probably starting to see some weakness in the stock chart of Tesla. So as we can see, there's actually a red downward resistance line over here. And unfortunately, last night, we see Tesla has already broken this support over here, which is about 978.60. This is where the blue circle is. There's a support at 978.60. And last night, unfortunately, Tesla has not only broke, it closed below this 978.60. And this complete and confirm to me this price pattern called descending triangle, whereby there was a lower high and it break below this blue horizontal support. So as well as it has also broken below its 50-day moving average. So ladies and gentlemen, Tesla stock chart, at least stock chart wise, doesn't look too optimistic, especially last night with the breakage of this 978.60, where this blue circle is. We probably may see Tesla hit lower, all right, with this bearish momentum. If that does were to happen, or we may see Tesla head much lower towards this green circle over here, which is there's a support at this green circle, which is 940 cents. All right, so at this moment, especially with last night a poor closing, we
Mm.
probably may see Tesla weaken further to this green circle support of 900.40 cents. Yes.
Tesla stock ended the session last night about 5% lower, closed at 966 US dollars and 41 cents. The stock has slid some 16% since the beginning of November, even as the S&P 500 rose more than 2% over that same period of time. Now, let's move on, Derick. We've got a couple of minutes left on the clock. And, when it comes to inflation, and we are tracking inflation, of course, daily here on Money FM 89.3. This is the show for investors. So I know inflation is high and rising, and investors want way to hedge and profit from rising inflation. Now, a couple of ETFs are pretty simple, effective inflation hedges. So I threw you a challenge. I said, Derick, can we look at a popular ETF? Let's look at Cathie Woods ARKK ETF. Is the ARKK fund bottoming again?
Frankly, no. Frankly, no. To me, chart-wise, ARKK, which is Art Innovation ETF, managed by the superstar fund manager Cathie Wood, doesn't look too good. Also, but anyway, let's look at a long-term view of ARKK first. Yeah, it has been doing well since it IPO in 2014. But let's zoom in. Let's zoom in into ARKK. So as we can see, there's unfortunately ARKK has broken a series of this first support over here. All right, it came down. So now I just want to say this. Even ARKK seems to be the darling of a lot of investor, especially this year. It has been
Mm.
weakening since February this year. It has broken a support and now is at another critical support of 89.03. All right, which is this blue circle over here. This is to me is an important support, 89.03, where the blue circle is. If ARKK were to break this support, ladies and gentlemen, at least stock chart wise, ARKK doesn't look too good. We may see so-called ARKK go even lower. All right,
What is that blue support level at again, that price?
89.03.
89.03. Okay, for the
Yes,
listener, ARK shares were down 1.7%, ended last night at $94.50. Go ahead.
yes. So so do watch out for this critical support. As we can see from the chart, over a longer term, we can see that actually ARKK has a lower high or it has a lower low. All right, so based on technical analysis, it has this what we call a downtrend, and this
Mm-hmm.
if this support 89.03 were to be taken out, we should expect more weakness in ARKK. All right.
Yeah. It's so interesting. I can see that downward trajectory, and it sort of
Yes.
matches what we understand of ARK as well, right? Because that flagship of Cathie Woods posted its worst week since February just 2 weeks ago. And it was in February we start to see a slide, even on your charts, right? But 2 weeks ago, it slid 12.7% to its lowest level in more than a
Yes.
year.
Yeah.
Coming up, I wanted to take a look at another ETF that could be a good inflation hedge. I don't know. We'll see what Derick has to say. From its low in March 2020, the Invesco DB Commodity Index Tracking Fund is up 102%. So is this still one of the best funds to use as an inflation hedge?
All right. So this is a long-term chart of DBC or 10-year chart. We can see that it actually form this what we call a double bottom chart pattern, and it since it's bottom up, its second so-called leg down. It ended around April, May last year, and it has a stage of very strong rally. All right, broke out of this double bottom, and ladies and gentlemen, let's zoom in.
Mm-hmm.
Recently, it has a pullback from about 2041, the high of 2041, to about 1925. Also, now we are at a point of time for DBC, whereby if DBC were to take out this red horizontal resistance over here, which is where the red circle is. If DBC can break above this 20.41, all right, so-called red circle resistance over here, which is where its green 20-day moving average is, then we may see DBC go higher towards this 20.41 resistance over here, which is where the orange circle is. That is provided that DBC can take out this 20.41 red circle resistance. It may have a chance to go higher towards the orange circle of 21.85. All right. But if going forward, DBC were to slow decline, weaken and decline, it will
Yep.
have a support at this blue circle over here, which is about 1920. All right, so we need to watch out whether DBC can take out this 20.41. If it can, we may see go higher towards 21.85. As inflation probably is not going to be transitory like what the Federal Reserve has said, and that's why Jerome Powell has retired the word transitory from so-called
Exactly.
the inflation commentary. Yes.
Exactly. DBC is a broad-based, by the way, listener, commodity ETF. It holds agriculture, energy commodities, industrial commodities, and each of these are weighed differently. And some say the bull market has led to spectacular gains for many commodity stocks, but there is still significant variation within this asset class. So
Yes.
you need to be aware of that. Looking ahead to 2022, you mentioned inflation not being transitory. This week, we're going to be looking at what the messages the Fed puts out
Yes.
tomorrow, tonight as well. I wonder, as an investor, how are you preparing for 2022? What are the sort of signals that you are reading? Do you still expect a spectacular bull market, or what are you preparing for?
Okay, Michelle, I think this is something I feel is really important. The bull market has been running since, the US stock bull market has been running since March 2009 till now. Last year, to me, it wasn't a bear market. It was just a big decline because of health crisis called COVID-19. Also, this is my proprietary dynamic cycle chart because I deal with cycle analysis of Dow Jones. We can see that there's actually a turning point in December, January. That's where I see we probably will see the top of this so-called this 12-year US bull market, and we probably will see a weakness coming in the first quarter of next year. This is what I'm preparing, not only for me, for my Timing and You community, and even I this morning I shared with the audience or the listeners over here. Please, I think we should expect a very volatile and probably a weak US stock market, especially in the first quarter of next year, as shown in my cycle chart. And to make things worse, I think inflation is going to be here to stay. All right, and to fight against inflation, like what Michelle has mentioned today, tomorrow, Federal Reserve is going to have the meeting, or they may have to double up their tapering, and they
Mm-hmm.
may have to increase interest rate earlier than expected. So all this probably is going to drag more, draw more liquidity from the financial market, and this could be a catalyst that probably may bring more bearishness, which we are starting to see in a lot of charts, like for example Tesla, ARKK, is starting to break down already. So this bearishness may continue, and I do think that first quarter may not be too bullish. In fact, I'm expecting probably a top coming in soon. All right, I think we should really prepare for that. Yes.
Well, thank you so much, as always, for sharing your proprietary views, risk reward assessment of stocks on the US stock market. Derick, we really do appreciate it. And we'll see whether your stocks pan out, because we'll have you back with us in January. Derick Tan there is founder of Timing and You. I'm Michelle Martin. Thanks so much for being here on Money and Me.
Money FM 89.3.